What are interest rates? Simple guide for loans and savings. Hey everyone, welcome back to Finance for All, the place where we make personal finance simple and actually kind of fun. Today we're diving into something that impacts literally every part of your money life. Interest rates. They affect how much you pay on loans, how fast your savings grow, and even how the economy moves. So grab a snack and let's break it all down. What is an interest rate? An interest rate is the price of money. If you're borrowing money, it's the cost you pay to use someone else's cash. If you're saving money, it's the reward you earn for letting a bank hold your money. It's usually shown as an annual percentage, like 5% or 20%. This number helps you understand how much you'll either owe or earn each year. Interest rates on loans. All right, let's start with borrowing. Say you borrow $1,000 on a credit card with a 20% interest rate. If you don't pay it off by the end of the month, you could end up owing $200 just in interest over the next year. It gets even more intense with compound interest, where you're paying interest on your interest. That's how balances balloon. Comparing credit cards and mortgages. Credit cards usually have super high interest rates, 18%, 24%, even 30%. That's why they're best for short-term use only if you can pay off the balance fast. Mortgages, on the other hand, might have rates around 5% or 6%. But because home loans stretch over 15 or 30 years, even a small change in interest can cost you tens of thousands in the long run. Interest rates on savings. Now let's talk savings, because this is where interest can work for you. If you put money into a high-yield savings account or a certificate of deposit (CD), the bank pays you interest for keeping your money there. For example, you put $5,000 in a savings account at 4%. That's $200 in a year, with no extra effort. And if it's compound interest, you'll earn even more over time. Want your money to grow faster? Look for compound interest in high-yield savings. So who decides interest rates? In the U.S., a big player is the Federal Reserve, aka the Fed. They raise interest rates when inflation is high to cool off spending. They lower rates when the economy needs a boost, like during a recession, to make borrowing cheaper. How to use interest rates to your advantage. So how can you win at this interest game? Here's the quick playbook. Pay off high-interest debt ASAP. Especially credit cards, shop around for low-interest loans when buying a car or house. Use high-interest savings or CDs to grow your cash faster. Avoid payday loans. The interest rates are scary high. The more you understand interest, the better choices you'll make, and the more money you'll keep in your pocket. If this video helped you finally get interest rates, drop a like and let me know in the comments. Don't forget to subscribe for more tips on making smart money moves. Next up, we're talking about how to build wealth with compound interest. Catch you in the next one.